After watching this video, you will be able to take trades like this, and this. You will be able to achieve trades like this using just one simple concept that I will reveal to you by the end of this video. So make sure you watch it all the way to the end so you do not miss on the most important part. By the way, if you're not subscribed to my channel, please consider subscribing as it goes a long way to support the channel. So basically, what I'm going to show you how to do is to spot levels in the market where there is high saturation of price and there's also rejections. Okay, so now there's specific kind of rejections, not just any typical type of rejection that you think. Okay, so I'm going to show you all of that in this video. So this particular concept is simply support and resistance, but it is support and resistance at a much more advanced way of trading. Okay, it's at an advanced level. So what you do is you go on a price chart, whatever price chart you wish to trade. This works on any price chart, but I don't really know how it functions on crypto, so I will not advise you go and use this on crypto, but I advise you stick to forex and maybe metals. Okay, so you go on your chart and you look for areas where price is saturated. What I mean by price saturation is this. Okay, you can see price here in this box, you can see price here in this box. So basically this is referred to as accumulation, as you can say, or consolidation, or whatever you can call it. But to me, I call this saturation. I call this, accumulated pricing. So these areas that you see me boxing up here are the most important prices, are the most important areas in this price chart. Okay, it's not this big push you see here. This here is just impulse. Okay, this is volume trading. So you don't want to look at this because it will not help you in any way. Price can reverse at any point when you're trading market conditions like this. So, but in a market condition like this, the market is much and very, very easy to, predict, because at this point, you know where price is being held up and you know where price can easily bounce at. How do you know that? So first off, I want you to look at where price is, consolidating like this. So once you see this price saturating, you now go inside and pick the areas where you have massive rejections. When I say rejections, I mean multiple rejections. Okay, rejections like wicks, not pullbacks. Okay, when the market comes and reverses, that's not a rejection. That is just like it's just a push. It's a push away from that area like this one. This is just the market, reversing at this area here. It's just a reverse. It's not a rejection. So when the market rejects an area, it rejects it with a proof, with evidence to show that it is unable to pass this particular price area. So this here is a price area that is impossible to pass. Okay, you can see price being held up here for a while. So this is what I call weak rejections. I refer to them as ACP. You can see it here. ACP stands for area of condensed pricing. Okay, so this is the particular area on this price chart that price is consolidating and it is being accumulated. It's condensed in this particular region, and I want to trade when price is in this area. Okay, so you have to be rest assured, and you have to also put it at the back of your mind. All of this is being carried out on the 4-hour time frame. Okay, 4-hour time frame, whatever pair you want to trade. Good. Now we look for these wicks, right? Pay attention. Look here, and you're going to see this wicks. The market entered, rejected impulsively with the wick, came back with the wick. You can see here there's multiple wicks here. So what I want you to do is try as much as you can that when you want to highlight your key levels or your ACP areas, make sure that you don't get a lot of candles inside. Try to get just the wicks, because in this market, or using this particular concept of trading, which I am the one who invented this particular style of trading, and this style, you do not want candlesticks in your ACPs too much. Okay, so I like it fresh. So when these wicks are inside, these are areas that are still fresh, and you want to trade, especially the first retest or the first rejections are always the crucial ones that are highly probable to work out. Okay, so you can see that when price bounced here, struggled to pass, after a few hours, maybe a day, it finally broke through, right? It broke through with this candle, quickly entered here and dropped. Now you might be looking for maybe a big push like this one, but using my concept of trading, we do not aim for moves like this. We aim for tiny moves like this one, because on this move I've already made my money and I'm out. So I don't have any reason to be in this market after this. Okay, so first off, the market will reject from this area, that's for sure, and I'm telling you this with full chest confidence. 90% out of 100, price will reject from these areas that has accumulated price and rejected it well with wicks like this. So price will enter and drop. Okay, the minute price broke above it, You can see exactly what price did. Price came back again with a wick and quickly rejected it. So on this particular candle, you'd have taken all your money on this trade. Just one candle, you're out of this market. Why? Because there's high volume resting inside this noise. There's noise here, but at the same time, there's a lot of liquidity. Reason being that people are buying and selling here, so there's kind of an equal price delivery because buyers are up, sellers are down. Sorry, sellers are up, buyers are down, and they're looking to push price in one direction, but they fail to do that because why they're equally delivering the same momentum, so price cannot go anywhere, so it's stuck. So now when you see price rejecting this area, that's to say there are big guys, there are waves in this area, there are whales in this area that they have like a lot of money here that's been traded. Buyers here and sellers on this other side. So when price breaks through, of course, the buyers are going to take advantage of that to push price higher, right? So after price has broken through these wicks, you see, price rejects. Same thing here. Price came here and accumulated a bunch of wicks, dropped, took out structure. I don't really care about the structure much, but this is just to help you, give you like directional buyers, right? So these are wicks here. Now, what I want you to pay to note is that these wicks, you don't have to trade like one, like a solo wick like this one. You don't want the price to come here and you're buying. You want to buy an area like this one that has a lot of wicks. You can see here. So price bounced off this area, also off this area here, because why we have more than 4 weeks. All right. So we have all of these wicks here that push price. Same thing here. We have a wick. We have wicks. Then price entered, drop, adding to these wicks here. So now we have a good number of wicks in this area. So now we have 1, 2, 3, 4, 5 wicks inside this area. So what you do is you highlight just the wicks like you see me do here, then wait for price to come back. When price gets back there, boom, you get a trade and you can aim for 1:1.5, 1:2, or possibly 1:3 based on your appetite. So this is it, and you don't want to stay too long in this market, guys. So make sure that your maximum should be 1:3. Don't aim for more. It could work out, and most of the time will come back because this area here, it's like a center of gravity for price, right? It's like a magnet. It magnets price. So when price pushes away from it, it does not really stay too long to come back. It will always come back because there's money here. You feel me? So that's why when you enter a trade, quickly get out. Especially at 1 to 2, get out because price will come back to retest again. It might come back and still drop, and it might come back and just break through. So let's see what happens when price came back here. You see price got there and still struggled to reject a little, then eventually breaking higher. Then what happened when it broke higher was it came back with rejections again. They came back here, broke, came back with this push, and now it's continuing to the upside. So that's typically how you see it still came back again and still came back again, then broke again and still came back again and broke again and still came back again. And it keeps coming back because that is where money is. Price broke, came back, broke, came back to it, sold, came back, sold. So all I'm saying is, guys, a market condition where you have a good number of rejections, that is what you want to trade. You do not want to trade just this. Don't say, oh, this is a deep push, this is an uptrend, this is a bullish market, I want to buy. Where are you buying? What if you buy here thinking the market will keep pushing and the market just starts dropping? You never know. You never know where the market will drop to, or drop what level will the market drop at. You don't know how deep the market might drop before it starts pushing again. So you want to be sure that when that happens, you don't want to be on the wrong side of the market. Now, guys, look at this trade here. This is another trade that I highlighted. Now, you can see here, see how the market, after this move to the downside, the market came here and was held up, right? These are weeks, holding up price here. Now, where's the box and where's the saturation? This is the accumulation of price. So every time you have a key level, you have an ACP area, make sure you spot this box, make sure you see this accumulation. After seeing this accumulation, what next do you want to see? You want to see wicks, right? These are wicks. Beautiful. After seeing those wicks, highlight those wicks. Don't make your levels too thick. Don't try to highlight the longest wick. Just try to keep everything like very nice and good looking, like this one. Nice. Then you enter your trade. Sell limit. Okay, we don't manually buy, we do not manually sell. The reason being that market always rejects these key levels with long wicks. Like the market rejects here and close about here. So you cannot be buying here to the upside. Okay, so always have a buy limit or a sell limit at your key levels. Calculate your risk properly and place your stop losses appropriately. Then we have our trade there and we hold on to price and see how price goes up. So this is how my model works. If you want to find out more about this model and how I use it, you can click the link down below to reach me privately. I'll teach you and I'll put you on mentorship. I have courses pre-recorded, and I also have a free Telegram group that you can be part of, which I share some of my free signals at. So if you want to be part of my mentorship, one-on-one Zoom calls and everything. It's all in the same package. Hit me up, and let's get to work. I give you 12 months with me, and everything's gonna change real soon. Okay, so let me show you guys multiple examples how this strategy works. I don't want to make this video too long. You can see price tick got back here and still rejected. So this works all the time, and like 90% of the time this works. Okay, I was actually on my Forex funds account, and before everything went down, I was actually progressing very much on that account, and it blew up. It closed down with the other accounts that already passed and the ones that I was still working on. So I just signed up with a new prop firm called the Fivers. I'm in no way affiliated with them. By the way, I have my referral link down below. If you use the referral link, I'm going to get some bonus. So you can check it out if you want to, you're looking for a prop firm that you can trust. I think those are the guys you can trust. They've been around for like 7 years. So, and they're also registered in the US or Canada. So I feel safe somehow with them. Okay. So this one here, guys, this is an example of a good ACP area, and you can actually trade that. So what I'm saying is, boom, you can see that, like, you can see that was really nice and sweet. You can see how fast that was. Okay, that's a 1 to 2 right there. So you don't want to be too long, because I told you this thing gravitates price will always gravitate towards this area. Price will always magnet back to this area. So you don't want to be too long in this trade. Like, look at that. So yeah, that is it. Thank you guys for watching. Consider subscribing. Check the links down below. Reach out to me, and let's do something together.